So it looks like everyone is talking about risk management this week. Um, and in times like this, when the market has a huge move down, and reading chats, I'm seeing a lot of mistakes that people are making. And one like the first thing to understand in this market, in like when there's chop, you guys have to preserve your capital. You don't always have to be in positions every single day. um, Sometimes you go weeks or possibly days to weeks where you have no trade. Okay. And to be honest, 75% of you are not cut out to be leverage traders. Okay. And that's just the pure honest fact. 90% of you are not meant to be scalpers. Okay. If you just buy spot and DCA on the way down, you will outperform 95% of the leverage traders in this market. And I don't understand why people, or not just people in the server, but people in general, are trying to make money quick. Okay, it's just not going to happen. No, I'm not changing chart theme to black. It's a terrible theme. It's only white charts. Turn your lights on. Um, but everyone wants to make money in this market fast, and that's how they blow it. Okay, especially when we have a change in market structure. Maybe not so much on the high time frame, but on low time frame. If you're trying to long everything when the market biases down, a downtrend, right? You are not protecting your capital. Okay, and if you are spot long, from much lower, then you want to protect your capital and open up hedge shorts. Okay, and a hedge is a one-to-one trade, meaning if you have, let's say, 50 SOL from an average of, let's say, $50, right? You're going to open up a hedge short, meaning you're going to open up a 50 coins short, right? So if price goes up, right, you're not really losing anything, and if price goes down, you're not gaining anything. You will close out the trade at high time frame levels of support, and then you can take that profit because you should be net zero, right, and put it into more spot bags, either reducing your average or increasing by a little bit, but increasing your position size. Okay. No, I'm not doing any charting here. I'm just talking about risk management today. Okay. Um, who are these white names that just come in here and ask for shit? Anyways, the other thing I wanted to mention was, um, a lot of people are over positioned, and by over positioned, everyone thinks high leverage means uh, you have to go in with more position. No, high leverage means you're using less margin. So someone that's using a, like, 100x, okay, and someone that using, let's say, 20x can have the same amount of coins with the same amount of port value, right? Um, so I don't know why you guys should are increasing your leverage and increasing your position size when we are in a downtrend. The number one mistake that people make in this market when we're chopping or going down is having multiple positions open. Okay, if you have more than two positions open at a single time, you are a lunatic. Okay, you should not have more than two position sizes or two positions open, because again, the number one important thing in this market is risk management, and I'm 100% guarantee you don't know how to manage your risks when you have 4 to 5 positions open. All right. So if you are, well, there's a reason why Jason's not here, right? Um, so if you guys are in positions, okay, uh, one sec, I keep getting pinged by Mayor Nationwide to like speak. Um, So if you are opening positions, okay, and I've spoken to this before, right? If you are opening positions, whoops, and you keep opening more and you see your, and here's the thing that people don't understand is, um, when you open up more positions and the market's going against you, okay, it's going to lower your liquidation price of the other coins. So let's say if you are in Sol and let's say you're in Bitcoin and ETH, right? And prices are going down, right? When you open up a new position, it's going to use margin. It's going to take away from your port, in lowering your liquidation price or increasing your liquidation price if you're long, all right, of your other positions. So people don't understand when they open up and they're in a deeper red position, all of a sudden, they don't have stop set. They don't, manage, or they have stop set, but when they increase their position sizing, right, because that liquidation price goes up, now your stop loss, and this happened, and I'm speaking from experience because this actually happened to someone here who DM'd me. They were in a Sol, ETH, Bitcoin, Sui, ARB, and I think whatever the coin, the sixth coin was, right. They were up in profits. They had not placed their stop loss to break even. Okay, they had the same stop loss they had, and at that time it was below their liquidation price, or sorry, it was above their liquidation price. Okay, so they were all long. They went to bed. They woke up, and we had this candle where we went from 44 down to 41. Okay, and we went down to 41, and every single position that they were in profit went red. All right. And they were still okay. They had not gone liquidated. Right. And then they decided to open up another long here. Right. And as soon as they opened that long, like within a quick hour, they were liquidated because we had this move down and it lowered their liquidation price on just one coin and they were on cross mode. Okay. Um, it lowered their liquidation price, or it made it a little bit higher than where they had it, and because they had a stop loss that was above their liquidation price, the liquidation price rose above their stop loss. All right, and when you're in a cross, if one position gets liquidated, your whole portfolio is liquidated. All right, so when you open up multiple positions, you better check your liquidation price of other coins. You better check to make sure you're fine and you can take, the move down. And the other thing is, you don't want to keep losers if you think the market is going down more. So you shouldn't try to DCA yourself out of something if you know it's going out. For example, I gave the spot OP call, right? And we had lost, let me show it. And people were asking why I closed out this position. Okay, I mentioned in my post, if we turn this $3.50 into high time frame resistance, okay, I'm closing out my trade. I did close it out around $3.20, which was here. It was a little bit too late. I should have closed it out there. But sometimes taking that small loss before it turns out into a bigger loss is the key. And everyone tries to DC out of positions because they don't want to take the loss. But I understand like not wanting to take a loss, but it's better to take a $20 loss than taking a $200 or even a liquidation. Okay, so you guys have to be okay with cutting losers, even if it's red, because you can make that back and get into better positions than trying to either one, hold to go to break even, two, try to DCA yourself out of it and putting yourself into a higher position, more quantity and higher risk trade, or three, again, liquidation. Okay, so the number one objective in this market is to protect your capital, right? And for me, knowing my weaknesses and strengths in the market, I don't trade chop well. So I'm not touching leverage until we have some stability and a decent range forming. For Bitcoin, okay, I did delete it. For Bitcoin, this was an easy range to trade, right? And now we are below range, so I have marked my levels on my chart, right? And I've been mentioning since we were up here, back over here, before we even made it to like 48, 50K, that we were going to go to 38K, all right? we are at a local top. We are at a quarter top. We are not going to revisit these highs for a while, in my opinion. Okay, so um, when we lose the trend or when we lose a range, you have to wait until a new one develops. Okay, so right now, like just like we broke out here, right? A lot of people were FOMOing into longs once we broke out, people long the top only for us to drop. Same here. We were at resistance and people were FOMOing longs at the top for us to drop. Now people are FOMOing shorts over here because we've lost range, and this is what I mentioned in my video. The only way to get long here is if we've put in a deviation on the buy side just like we had on the sell side, right? Deviation, reclaim range lows, and that's when you long. Otherwise, you're looking more for the bottom. Okay? So right now, this isn't a time to go gung ho and get into multiple positions. This is a time to build your spot bags, which 80% of you do not have, right? The number, if you want to make money in this industry, okay, you need to, DCA on red days, buy on red days, add more on even, redder days, right? And then you sell at the next cycle. Okay, um, and I mentioned this before, and this is the one thing that I teach and preach to not just my students but my family members, that are getting into trading in general, whether it's crypto, stocks, or whatever. You guys have to have multiple accounts. Okay, what do I mean by that is you need to keep your long-term spot account and your short-term spot account for those spot traders on separate exchanges. All right, because if you want to get into, and for the record, every call that I've made on coins, okay, I have not sold a single penny on my long-term account. Right? Um, it's long term. I'm not selling till next cycle. When I'm talking or when I keep saying, hey, like I've taken TP here, I've taken TP there, this is my short term account. Short term trades compounding into other short term trades, make capital, my buy more spot, send to my long term account, and repeat the cycle. Right? So you have to keep your long-term port versus your short-term port separate. You have to keep your swing account on leverage and your scalp account on leverage separate. Right? I know it's a lot of account management, but it's good risk management. So this is what I personally do. Um, like you know, bag held sold from 26 to 120. Did not sell it on my long-term account. Sold it on my short-term account, and that's totally fine because I'm not looking for, quick gains on spot. Okay, as I mentioned, spot is where the most money is going to be made. You buy $50 here, coin does, 10x, 20x, 30x in the bull market, right? With 50x, you've turned into $1,500, right? And now if you have like 10 or 15 coins that do this, right? All you put in was $500 for a what? 150x on your returns. Okay, so separate your accounts. Okay, um, so that's the number one thing. Okay, let me answer some questions before I jump into some more points here. So let me just go to the top and bear with me. I'm going to the top. Um, sec. Sorry, I'm reading. Does the max two trades also matter for your medium long term positions? Good question. So when I'm in spot coins, okay, I allocate 6 to 8% of my portfolio to 3 or 4 coins at a time, and that's including DCAs. So if I have, let's say, a $10,000 spot portfolio, and this is long-term coins, it can be short-term depending on how you want to play it. Um, I allocate, you know, if I have 4 entries, right, I go in lightest at entry and DCA heavier, right, until my 6 to 8% is met and fully filled. Um, I don't have stop losses. I don't have TPs on my long term. They're manual, so I will close them out like OP, right? I manually closed it. I don't set stop losses on spot. Second, um, so spot 6 to 8% of my portfolio, and I'm in no more than 4 to 5 trades if it's short term. If it's long term, then I don't want to have more than 10 coins open at once. So this is something that I mentioned in my to my students, and I think I mentioned a few times here, is I go in with each coin uh, initially with a certain amount of capital. So this is what I did last cycle. I went into 3 or 4 coins with let's say 5K, right? Whenever that hit 3x, you take out your initial capital, and these are long-term positions. You take out your initial capital and you ride the free coins. You compound that 5K or whatever your initial capital was into other coins and do the same thing. Once they hit 3x or whatever your desired percentage is, take out your initial, roll it over into something else, and do it over and over again. So now you have free coins, you're riding them, right? You can always add on the way up if you want, but for me, it was the easiest way to build a portfolio. You go, you pick 3 or 4 coins, you put in, let's say, $1,000. Once they hit $3,000, take out the initial, roll it into, and do it over and over again. Now you have, your initial 3K that turned into 12K. You have 8K in profit, right? You've taken your initial 4K out between those 4 coins, rotated into something else, and now all of a sudden, while your other 8K is still going up, right? You have 4 new coins that are doing the same thing. Take it out whenever you're happy, rotate and build and compound that way. That's what I was personally doing. Okay. Um, so that's what I've been doing now. Although I said I haven't sold like a bag, I did take out my initial, but I'm saying I didn't sell anything outside of my initial. Okay, so this is how I'm compounding my long-term spot bags, and you want to focus on those new shiny coins and not the old dino coins like Litecoin, XRP. And this is the one thing that I will give the Sol community. They are not as annoying as the XRP community. Okay, it's soon going to change, but for now, you guys are okay. You guys are still terrible, but you guys are number 2 on that list. All right. Um, you think we go up right now and then to 32K or straight to 32K? So it's going to be a chop right now. For Bitcoin, we're not going up until we reclaim this 40.5K range lows, and then you look at mid-range and range highs. So for us, and I mentioned this in my video that I posted, and let me flip charts. And the number one tool that you guys can do to see a lot of things is to invert your charts. You will see things much more cleanly. Okay, so we have this unswept liquidity here. Okay, this is an inverted chart. We just went up from 26 straight to like 37, right? And then we flipped that 20 or that 33K level to support, right? So we haven't tested that. So for me to be ultra bullish is we have to go lower first. And I mentioned this inverse head and shoulders, okay? The target of that would be that sweep. And I want this to be swept before we go higher. If we do sweep this, okay, if we sweep the 32 to 31K level and we sweep it and we go higher, this will be our bottom for this macro cycle. Okay, we will not go lower than this. Last bull cycle, we had 9 drops of 30% or higher. Okay, and I think this will be our lows. So if we sweep this, then we will go higher. But if we go higher first, I think the drop will be bigger. So, and by higher, I mean like if we revisit 45, 46K, we can go to 42K, put in another, let's say, lower high here, right? And then make our way down to 35, 34K. So that's what I'm looking for. No longs until we reclaim this range lows, but I do think that we can revisit 32 and 31K, take the liquidity, and then go much higher from that, putting in a macro bottom for this cycle. Okay. Um, so 2% portfolio per trade. I think I answered this briefly, but for spot, it's 6 to 8% per trade. Okay. For leverage, if you're scalping, it's 2% per trade. But if you're swinging, you can increase it to 4 to 5%. Meaning, if you're in a swing trade, you can lose up to 4 to 5% of your portfolio if your stop loss gets hit. Right? But if you're swing trading, you should not be in more than two swing trades at a time. Because if both of them hit, you lose, 10%. Say you have a 100K portfolio, how would you DCA allocate it on Bitcoin for simplicity considering current market? Um, you I have a DCA method linked or pinned in my channel of how I DCA. Okay, now that's leverage. For spot, you want to choose your high time frame macro levels of support, and you either DCA evenly. You can go 20, 20, 20, and then 40. You can go 25, 25, 25, 25, however you want to do it. But how I would do it is I would always have my entry be the lesser of the four or five or however many DCAs you have, and each DCA will be heavier or it can be equal to or greater than your previous entry, except for your last one, of course, because it won't be that way. So if you go, let's say, at 38K, let's say you have like $10,000 and you want to put it all towards Bitcoin, right? So let's say 38K is going to be $1,500, right? 36K is going to be like 2,000, right? So you have $3,500 already done. 34K or whatever, you're going to put like 3,500, right? And the last one is going to be like 3,000, right? So something like that. What percent of port should be used for shitcoins? So if you're doing anything on Sol, put whatever you want to lose, and I hope you lose it. But anyways, you should put only like 1 to 2% of your portfolio into these meme coins and shitcoins. Um, but total overall between small caps and shitcoins should be 5%. So whether you have 1 to 2% in these shitcoins, 3% or 4% in like small caps. Small caps, I'm talking about like uh, coins like Pepe and stuff like that. For those that are holding Popo, fuck that, it's going to zero. I don't know why I put $50 in it. I'm asking for a refund from Tip. Um, what about the ADA community? ADA community is not that bad anymore. I will not buy that American Disability Act coin anymore, but they're not as annoying. If we get to 35, 34K after 42K, do you think? Yeah, I hope that answers that question. Did you DCA at all during this drop, or were you waiting? Well, I posted some spot plays that filled. Some were compounding from entries that I had higher. I haven't added anything to my long-term bags yet. I'm still very much deployed. I haven't added anything there. Short-term, yes, I do take profit on the way up. So, like for Injective, for example, when I first gave this call, um, we were at like $28, like here. Okay, I compounded around 31 and 36. I sold a whole bunch around 45. I compounded here again. That's the call I gave. I sold a whole bunch here. I had 25% remaining. And then DCAs filled yesterday. I have these as well. So short term bags, I sell. You know, if you compound multiple times on the same coin and play the same levels over and over again, then you can make some serious dough. So all the coins that I gave are in my channel. So yes, I did fill some positions. I don't know anything about Pyth. I'm not buying Pyth. I'm not staking Pyth. With many exchanges going KYC soon, how do you suggest we store our coins or sell them besides Blowfin? So I can't give this here in terms of this is not financial advice, but I bought a resident or digital residency for a Palo ID. I just set up or I'm going to set it up this week. I can KYC on KuCoin, Bybit, and that's what I'm going to be using. For those that KYC or they can't use an exchange, if you want to hold your coins, I suggest some hot wallet, probably like MetaMask, Coinbase wallet, and then you send it to an exchange to sell, but you have to try to find something um, or buy something for the time being. I don't know how to get around that. Do we have to hit 31, 32K? Is just the next stop? No, we don't have to hit it. 35, well, 35 to 37 is the main level of support we have to hold. I don't know what the fuck Catalyst is. Probably shitcoin. Going to zero. Used car. I hope that shit goes to zero. I'm never buying used cars again. Does Palo work with Binance? It does not. Um, Binance requires a like address. So I'm using Bybit and KuCoin. I'm looking for clarity on the ID you're getting. Do you not want to use government? So for those that are in restricted countries, we can't use government IDs. It won't go through. You need um, a country that is able to trade derivatives, and that's the thing. They're not limiting spot. They're limiting. Well, I'll take that back. Some coins you can't trade, right? Like for example, not all coins are on Coinbase. They have to be registered in the states, right? Derivatives is banned in the United States, right? That's what they're limiting, right? That's why we're restricted. So for a derivatives trader like myself and a few others, we can't use our government IDs. That's why we're using Palo IDs. HBAR is not a shitcoin last time I checked. HBAR is a shitcoin that's in my portfolio. I do trade on Blowfin. Yes, I am partnered with them. I am trading on Blowfin and MEXC for the time being. But once MEXC does KYC either February or March, I'm moving to Blowfin. And I have my spot on Bing X. And again, once I get my KuCoin and my Bybit, I will be trading there as well. It should work on MEXC. I did ask them, and they said that the Palo ID does work on there. MEXC will go into mandatory KYC February or March. That's when my rep told me. They didn't give me a hard date. I can't post a Palo ID here. I'm not gonna post anything that um, shouldn't be in here. So if you guys are interested in the Palo ID, I can only DM you guys. But I don't want to post anything that is super risky in the server. Do you know when BingX will KYC? Sometime this year. All these big exchanges are going to KYC. Like Blowfin, I was told 2 years they're not going to KYC because they're not that big. But once MEXC and BingX does KYC, liquidity will flow into Blowfin. Eventually, they will get big, and eventually they will KYC in years to come. Can you share some insights about risk management? That was the first half of the class. What questions in specific? I went over position sizing, um, splitting portfolios. Any reason why you're choosing KuCoin and Bybit over staying with Mexi? Well, KuCoin, their spot, that's where I'm going for spot. I'm not trading leverage on there. Fees are awful. And I just like Bybit. Um, Mexi is just, the reason I was only on there was no KYC and I was using Bybit before. So when I moved over, Mexi was the only one. BingX is terrible in terms of fees. Mexi had really good fees, but they're going to bump up their fees eventually. They need to make more money. So I'm just going to go to Bybit. Yeah, it's RNSID. Yep, this is recorded. Why is your voice so raspy? I've been sick for like 2 months. What about spot and futures grid bots? Nope, I don't use grid bots. They're a waste of time. Any other questions in regards to risk management? Um, and back to risk management here in terms of position sizing. Um, when we are in terms or in an area where we are chopping, or when you have no idea where the market is going to go, you have to reduce your position size. Okay, what does that mean? If you go in with $100 margin per trade, right, lower it to 50 or 60, whatever it may be. Um, Again, the number one rule in this market is capital preservation. Okay, you need to preserve your capital. If you're unsure about the market, lower position size. That's all I can say about that. You have to understand position sizing before you get into leverage trades. And another thing about leverage trading, set up your stop losses before you go into trades. Do not set them up after. Because if we were in an area, let's say we were here for Sol, all right? Let's say we were here, okay? If you decided to market long this support, and then all of a sudden we have this, you know, $5, $6 candle down in a matter of 15 minutes, and you set up your trade, right? And you just market longed and you walked away, right? And your liquidation price was $88. Like, oh, hey, shit can't go down that fast. Well, shit did. Shit hit the fan, right? And I know a lot of people don't put stop losses until after they're in trades. If you have terrible, terrible thing to do. So please put your stop losses before entering trades. There's a reason why I never market order any leverage trades. I always set limits. I uh, you know plan out my trades and how much I would lose if stop losses were to get hit, right? So I have a plan before I go into anything. I always set limits at high time frame levels of support, plan my DCAs, put my stop losses. I just change my TPs after they're in positions, not before. Okay. If someone wants to trade with $100 for futures, how much margin should they use per trade and leverage? As many. Well, if you can trade leverage profitably, you shouldn't touch it at all. Um, you should not risk more than 2 to 3% of your portfolio in scalps and 4 to 5% in swings. Meaning, if your stop loss were to get hit, that's how much you would lose of your portfolio if it were to do so. You have to figure that out for yourself. I can't give you round numbers. Coinbase Pro leverage is joke pro. Yeah, yeah, they're not getting anything. Is it okay to use 10% spot trade if a port? Yeah, it's totally fine. Again, if you're using 10% of your port in a spot trade, right, you can only lose 10% if it goes to zero. You're not getting liquidated. So you can always close out a trade if high time frame resistance gets flipped to, or sorry, high time frame support gets flipped to resistance. You can manually close out the trade and not lose. So this is why I go in heavier on spot and just, close out when I have to. You think three different accounts is sort of mandatory? I have seven different, well, I have five different accounts. Um, and I keep track of every single one. Some I don't use for the week, right? If I'm not in any swing trades, I don't use my swing trade account. My spot trade account, my long term, right? I haven't touched because I have like 40 coins in there, um, and I'm not selling for the next market or the next cycle market, cycle top. I'm just using my short-term spot account, my leverage spot account, or my leverage scalp account, and my challenge account that I have for myself. Do you ever utilize options for hedging? Been doing it for years. Does it seem like anyone here knows what that is? Um, Options, as in just like different avenues of hedging, or are you talking about the hedging mode in general? I'm gonna answer OT's question first, and then I'll jump to the other ones. I hedge a lot, so like I don't post it, but if I'm like in a short, sorry, if I'm in a long on Sol from like 26, and I'm pretty heavily over positioned on spot, right? Instead of taking profit on my long term, I just one to one hedge short because I'm not making money if it goes up, right? I'm not making money if it goes down either. I just can increase my position size if it goes down by closing out the short for profit, but in reality, it's not really profit because you're not making money if it goes up or down. And selling put to hedge volatility. Oh, good question. No, I don't use options in terms of puts and calls for crypto. And I asked the only um, hedging that I'm doing is through my 401k. Um, my company offers something that we can actually, you know, hedge against crypto as well. So my 401k, you have ETFs now, right? But we also could invest a portion of it through Bitcoin. But it's similar to like a put where you're opening up like in a way it's like a leverage thing. It's hard to explain without me showing it, but I'm not going to show my 401k. But you can allocate a certain amount each paycheck to go towards you betting on which way you think Bitcoin's going to go. It's like a risky thing they have, and I've been doing that. Every paycheck for the past month and a half has been going towards me betting Bitcoin's going down. And you can increase and allocate more, but it comes from your paycheck. It's a weird thing. But no, I don't use options in terms of puts and calls to hedge against crypto assets. I should. I just don't have the time. When you calculate your position size, how much do you allow for stop inefficiency? So I'm going to do one example here on this so people understand. Let me get my handy dandy calculator out. One sec. So for those that are in my class, I'm sorry, I'm like coughing. For those that are in my class, have seen this. Okay, and I want to show. Let's do let's do Sol. One sec. All right, let's start with a fresh chart here. Okay, let's go to a 4 hour and let's place some levels on the charts, right? So I chose the support level, okay, and let's DCA here, and let's DCA, let's say here, and this is the play. Let's say my stop loss is there, I'm targeting there, and we are back in time here, okay? So let's say your leverage account has, let me go back to charts one sec. Of course. One sec. Okay. So let's say, oh, did it not stop sharing? All right, sorry. I got Discord updated. One sec. Stupid. All right. So let's say this is your play. Okay, your entry is 87.4, DC at 83.46, and your last DC is at 76. This is a leverage play. Okay, and let's say you have $1,000 portfolio, okay, in leverage, and you're using 10% of your port on this play. Okay, so with the calculator, and we are right here, right? We are at $92, and I'm setting bids for this. So let's say we go to 87.4 is our purchase price. That's our entry. 83.46 is our DCA, and 76.09. Let's just round that up to 1 is our last DCA price. Okay, so if stop loss were to get hit, okay, it says we lose 19.25%. Does it mean we're going to lose 19.25%? Now this goes with proper risk management. Okay, so our stop is $17 difference, right, from our entry to stop loss. Okay, now there are other calculators that help do this, but this is what I use. Right, so let's say you have $1,000 portfolio and you're using 10% of that portfolio in this trade. Okay, does it mean you're going to lose 10% of your stop loss were to get hit? It definitely doesn't mean we're going to lose 19% of our stop loss gets hit. Okay, so with my strategy of the 15% of entry, 30 to 35% of DCA, and 50 to 55% of DCA2, okay, we're going to, let me get the calculator up. We're going to find our position sizing. So if we have a $100 margin, and I always use 10x. Okay, if you see me use anything more than 10x, it's because I am decently in profit and I've moved my profits or my stop loss in profit. I always enter in with no more than 10x. Okay, so let's say we're using a $100 margin, which is 10% of our $1,000 portfolio. Okay, and at our entry, we're using 15% of that $100 margin. So $15, which is 15%, times your leverage. Okay, that is the margin used in this trade after leverage is applied. Divide that by your purchase price. So you get 1.71 coins. Okay. Next, we're using 30 to 35% of the margin of the $100 that we allocated for this trade. So let's use 30. Multiply that by your leverage. Divide that by your purchase price. You get a total of 3.59 coins. And last but not least, we use the remaining $55 of margin. Okay, right? Because we have $10 there, $30, or sorry, $15 there, $30 there, 45 plus 55 gives you $100, right? Times your leverage. Divide that by your purchase price. Whoa. Divide by. Okay, so you get a total of 7.22. Now this is granted that all your DCAs fill. Okay. If all your DCAs fill, you have a total of 12.52 coins at an average of 79.75. So I'm just going to put that in there. 79.7538. Okay, I'm going to make that blue. So this is granted every DCA fills. Okay, so if that happens, your entry moves there, right? Your stop loss is still the same. Now, for every dollar, you are making or losing $12, right? So now if stop loss were to get hit, okay, we are losing, calculator. So you take your average, subtract it from your, or subtract your stop loss if it were to get hit, okay, and then multiply that by your average cost. Okay, so if your stop loss were to get hit, you would lose $116. All right, so you lose 11% of your portfolio. So this is a wide stop. What do you have to do to only lose 4 to 5%? You have to lower your position sizing. Okay, so instead of going, 15, 30, 35, 50, 55%, you lower your position size. So let's say you make this 1, you get this to 2.5, right? And then you get this to, let's say, 3. Your average will be a little bit different, but now if stop loss were to get hit, right, 80 down to 70, you only lose $65. So you're losing 6.5. So you have to lower or play with your position size. So if your stop loss gets hit, although you risked 10% of your portfolio, you are not losing 10%. You can still lose 4 to 5% if your stop loss gets hit, even if you go in with 15% of your portfolio, right? Just play with it so you're not risking more than 2 to 3% of your port on scalps and 4 to 5% on swings. Okay, so for me, this is how I find how much I'm losing on a trade. I set up all my levels before I go into a trade. I don't ever mark it into anything. I let the trade come to me. I calculate everything if it were to get filled. If DCA, if all the DCAs don't get filled, then I calculate my average for the first two. But in terms of, let's sec. In terms of stop loss efficiency, right? Like I take into account wicks as well, right? Like this shit doesn't happen often, right? So I allow myself some breathing room for wicks just in case if we do come down here, right? And then we take this, and it was just a wick to grab liquidity. I would set myself some breathing room for that to happen, but everything is calculated before I go into a trade. What if we wait for the second or third DCA level to enter, other than entering at a higher level than DC on the way down? Um, so if you're doing that, right, like you're basically entering at other support levels, which is fine. But what if it doesn't get to it, right? And yes, that makes sense. Like for example, Rampage, if this was my entry and you decided to DCA at this or this one instead, right? Then yes, your trade is going to be a little bit different. You could have the same stop loss, but what if it doesn't come and fill that DCA and it just fills your entry and goes higher, right? So it doesn't matter how you do it. Your entry should always be less, in my opinion, to allow yourself room for error, and your DCAs to be heavier to, you know, keep your average lower towards the last DCA. Just to clarify, bro, on your long-term spot strategy, it's better to limit coins to three rather than split. Correct. Yeah. So at least that's how I did it, right? Like when I started, it was 2018, 2019. I had it split up between three coins, and yes, it went up. And then 2020 happened, and prices went below than what I bought it for. And then I just held. Once it did 3x, I sold my initial into other coins, and then all of a sudden I went from three coins into like 25, 26 by the end of the cycle. But that's a whole separate strategy. Like that's what I did. Doesn't mean everyone's got to do it. It's still, you should still buy some coins and not outside of that strategy, and just have it in your portfolio. That's what I just did on three coins, because a lot of people don't have patience, so it's better to like diversify between 6 to 7 coins at the beginning, and then put most of your capital into three coins that you think are going to do well, and then apply that strategy or whatever strategy you may have, to at least keep your free coins, add your initial into other stuff, compound, and therefore. Is it uncommon for your entry to be smaller than your risk? For example, I'm willing to put up $10 and willing to lose 20. $20 entry would make my stop loss too tight. Is this a bad trade idea in general? So, so your risk to reward is like 1 to 2. So people that have 1 to 1 R trades are fine. Like especially in forex, I see a lot of people use 1 to 1. But if you're putting up $10 to lose 20, um, you typically want to go for at least a 2R trade. I don't know how it is on funded. It could be a little bit different, but um, what is your method of finding new coins to buy? So I'm in this private server. We share a lot of alpha. Um, but also Twitter. Twitter is your number one. So like a lot of the coins that I call, I see like it trending, right? I see like these Twitter accounts post it. I go and do my own analysis. I give my own levels and stuff like that. But these new coins, right? Like it's just alpha from networking. So I'm in this private server and we share a lot of alpha. What are the coins you're holding for the upcoming bull run, especially mid and low caps? They're all shared in my channel. You still max out your 401k out. I contribute a lot to my 401k. How do we get into your class? You can DM me. It's not free, just to let you guys know. But stop losses don't always fill at your price set. Do you factor that in? Good question. So that's what you meant. Okay. Um, so you should have multiple stop losses set. Okay. So on Mexi especially, right? You can have partial stop losses. So yes, I do use partial stop losses, and I have them spread out. Like for example, if my stop loss was 70.445, right? And yes, you have wicks that go through, and sometimes it doesn't fill all of it. So I have, stop losses at like 70.445, 70.42, 70.39, and that way. That way you make sure everything is getting filled. Because some exchanges, when there is a lot of volatility, just like this one, first of all, you're going to have a lot of slippage, right? And there's nothing you can do to stop it. Every exchange will have it. But having multiple stop losses set will increase the likelihoods of all your bids getting filled, whether you have minor slippage or not. Okay. Thoughts on funded accounts? I don't like them. I don't do them. I don't like rules. I like to have my own. How many more good coins to come before bull? Say Sui. There's the coins that are going to do 50 to 100x have not been created yet. Okay. How to join the alpha? You can't. It's a private server. You guys can't join that one. All right. When do you know they've been created? I don't. You don't. It's just alpha shared between Twitter people. They're on there for, and then you go and see when it was created, Coin Market Cap, so on and so forth. You're gonna try find. So I'm not the the server that I'm in. We have a bunch of people that are into like fundamental analysis, and they find these coins and they share it with other people. I don't have time to find those coins, so they just tell me, and then like for example, coins like PAL, right? PAAL, um, privacy coins, like I was able to find Luna way early because of these people. I got into Luna at 70 cents during last cycle. That's when I shilled it. And for me, I sold it at $21. But like these coins eventually will come and people will shill these small cap coins on Twitter. And then these small cap coins will gain popularity, like Ator, right? Like Ator was very low cap. Um, 0x0, right? Another privacy coin. These all started from Twitter. That's how I found out about them. Oh yeah, anything that um, you know that is new and about, I share in my classroom server with you guys for sure. I just haven't found any yet. What are your thoughts in OXO? I have a small bag. I invested 2K into it. I'm up like 5x right now, but I'm gonna hold it till next cycle. Yeah. When Arsh coin, I don't know, someone created it so I don't get in trouble. You guys can take the blame for it. Never put yourself in harm's way. Always put others. What do you suggest I do if my account's only $100? Um, Pick a few coins for spot and hold. You shouldn't trade leverage. Is $500 a good starter balance between what split should I do between spot and leverage? 10% of your portfolio should only be in futures, the rest should be in spot. I hate DYDX. I don't care. This was like one coin that I had on my stream for class last night, and it's the one coin that I cannot trade well. Um, so if it's a coin to hold, just like Woo decentralized exchanges, right? You just hold them and just wait for them to do well in the bull cycle. About how many coins should I split from my 3K wallet? Up to you, man. I can't tell you that. ETH is hard to trade. It's also been very disappointing, but I do think we see like 2K ETH or 1900 ETH one more time. All right? Is ETH a shitcoin? It's better than Solana. Just a question on the hedge thing. If you're hedging, when do you know what's the best time to close your hedge? If market turns bullish, or do you set stop loss and TP? So good question. You really don't know. You don't know when the market's going to reverse. So if you're hedged short, right, 1 to 1, you're technically not making or losing money. Um, but in terms of, let's say you got into Sol around here, like 106, right? And you were long from Sol around here, 33, right? On the way down, you're going to take profits at high time frame levels of support, right? So if we were here at 106, then maybe you take some here, maybe you take more at 75, and then more, or close out your position at 62. Take what you've made, put it into your spot, increase your spot position, right, and just go there. And then if it continues to go up more, right, you can always hedge more, but it's really hard to know when to close because you won't be able to time the exact bottom or the exact top, whether you're shorting or longing. But you just want to take profits at high time frame levels of support. What factors are you considering when entering those hedge positions? Um, so you only want to hedge when you know that the market sentiment is bearish, right? To protect your longs from much lower. So if you got in here around 30 or $35, right? And we are at high time frame resistance like we were with Sol, right? Like 120, 121ish. That's where you open up hedge because you don't want to lose money from here, right? So you open up a hedge 1 to 1, and while it goes down, you're making money on your short, losing money on your longs, but in essence, you're washing out your gains. When you sell, you realize the profit. You can now increase your spot positions, and that way. So you want to take it when you know that we are at high time frame resistance, whether it's Bitcoin or that coin, and that's when you open up hedge shorts. Or other way around, right? If you are net short on something, meaning you don't have a spot position. So let's say you open up a net short at 121 and you have no spot sold, right? And then you think that we're going to go back to 50, right? So you open up some longs around on spot around 75 or on leverage 1 to 1, and it goes up a little bit more, right? You sell out, let's say you open up at 75, you sell at like 88, right? And then you can compound your shorts. It'll increase or lower your average, but at least you have more positions on your shorts, stop loss to break even, and then ride it that way. What do you think the bottom of Bitcoin is before the run actually starts? We already touched the bottom. We're not going below 15K for sure. I don't think we see 25K. I think if we are, I mentioned this earlier, watch the video on my channel. If we do get to 31, 32K and sweep it, that will be the bottom in my opinion before the next run. Is Beam better than Gala? Um, I don't know anything about Beam. I just hold Gala. This video will be on my YouTube channel. Please get me to 1,000 subscribers. I have 70 more away, and then I'm at 1,000. I will make sure that someone in this Unity support group will do a live stream of themselves running naked once I hit 1,000. All right. What do you think of PYR? I like it. It's in my long term. I'm still long from $3. My short term, my DCAs have been filling. PYR. So I DCA'd at 640, 547, and I have these that have not filled yet. You can find these in my channel. Yeah, so say or Sai, however you want to say it. It's one of my biggest bags. Top three. UNFI is a shitcoin. Alright, guys, I'm going to stop recording here.